Hey guys, it's that Dividend guy here. Happy Thursday. First of all, just wanted to apologize again. I know I did in the last video too, but I did post a little later. I had Financial Peace University class, and that will happen one more time. I'll probably be late next Wednesday as well, just because I go to class and then I hang out with my dogs after. So I miss my pups. So if I can spend a little extra time with them, I will. So apologize for the late upload, but today, happy Thursday, we're doing great. Generally, I try to record the videos around 3 o'clock because that's when the market closes, but I wanted to do it a little earlier today to make sure we get the video out of the way earlier on. So right now I'm about at 15.9, so not too bad, almost to 16K. For the day, we're up about 30 bucks. So an AT&T stock for the week, we're up 385. For the month, we're up $1,100, which is great, almost 1,200. For the 3 month mark, we're up $1,900, which is great, 14% gain. So not doing too bad there. For the year, we're up 9.7, and all time we're up 9.4. So we're doing about the S&P average right now. I know I don't compare, but just kind of give you a benchmark of where I'm at. So I'm matching the market right now, which is something most analysts can't do. They can't beat the S&P 500. A lot of them struggle to even match it. So I'm doing pretty well for kind of a novice investor. I've been doing it for a very long time. But you guys know my investment philosophy. I go for dividend aristocrats and kings. I am trying to dabble a little bit more in value, but my main portfolio goal is to get dividend stocks, dividend income, passive income through dividend investing. So let's take a look real quick at how I'm doing right now for my stocks. I'll just go down the list. Altria Group right now down by 7 cents, 15.20, still up technically because it's at 15.84. My average price is 45.20, so I will not be buying any more shares. I'm up about 60 bucks on that position. 51.10 for Coca-Cola, about $1.10 or $1.20, so up on that position, about $21 up. Not too bad for 17 shares. AT&T's been the monster grower in my portfolio at almost $40 a share. I bought it at 31. I have 62 shares, so I'm up $520, so 20, almost 27% gain. $14 up today. That's great. And the reason I think I've explained it before, but in case you're new to the channel, I actually bought AT&T right when the Warner acquisition happened. And I wanted telecom in my portfolio, and I was really leaning towards Verizon originally when I was investing. But AT&T was one of the very first stocks that I bought because I bought a couple shares and I sold out of them, which I shouldn't have done. But when that merger happened, or the acquisition happened with Warner, I saw the potential. So I did a lot of research on Time Warner, and I was actually looking at them versus, say, Fox or Disney. And now Disney owns Fox. But I was looking at an entertainment company, and I love Warner Brothers. They own the rights to Harry Potter. They have Looney Tunes, the DCEU, and they're just cheaper than something like, say, Disney, or even, I think they were cheaper than Fox at the time, too. They might be around the same price as Fox, but I believe they paid a better dividend. So I was actually looking at Warner, and so the idea I had was, well, if AT&T is sitting at $30 and it hadn't really moved at that point. It usually traded from $30 to $31, maybe 32, and Warner was at like 35, I believe, at the time, or maybe even up to 40. Why would I not buy AT&T shares? Because technically, if you look at it from a stock price perspective, I would be getting, sorry guys, I would be getting AT&T, or excuse me, I would be buying AT&T, but I'd be getting Warner assets for free. So technically, if you combine the two stock prices together, it'd be a $60 stock, around there, about $60 or $70. And if I buy AT&T at 30 or 31, I think was my average price. If I buy it at 31, then I'm technically getting Warner for free. So that's why I did it. And now the Warner assets are finally being added into the stock, I believe. So now I'm seeing great gains, and the upside is I saw it before it happened, which is great. That's always what you want to do: buy low, sell high in the stock market. But the bad thing is, for me as an investor, is I go for dividends. So I actually want the stock price to tank. And it's been going up, which is great for capital gains, but that's not what I'm after. So I used to be able to buy an AT&T share at $30 a pop because my average price is 31. So I bought 62 shares at 51 cents. I was able to buy another share. Now, not so much. And so now as an investor, I struggle with this because I want more AT&T. It's probably like my second favorite stock behind Coca-Cola, but I don't want to increase my price and miss out on these gains. But at the same time, I want to increase my dividends, so I might just bite the bullet and buy more shares. But that has been one of my best trades thus far, is AT&T. Love the stock. Think it's a phenomenal company. Next is AbbVie. Just like AT&T, I'm up big on this one because, again, I saw that it was below market value. So I bought AT&T at 31 with Warner Assets not priced into the stock. Goes up to 35. AbbVie did an acquisition of Allergen, and the thing is that makes sure that they're not 100% dependent on Humira, which is their big drug that makes them a bunch of profit. It's the best selling drug in the world, but I liked it because it diversified them. But what was even better is it made the stock price tank. Like it went down to like $60, I think, a share, something like that, 62 a share, and I bought it at 72. So I was kind of iffy because I'm like, I bought it $10 above the 52-week low, which is still fine because if you look at the price, the 52-week high is about $94. So I still have a 14 or about a $10 upside now, about a $12 upside now on 60 shares. So that would be $10, so another $600. So I have about $1,100 or $1,200 profit strictly on this stock from 52-week highs since where I bought it at. And right now, obviously, the market's correcting and overreacted to AbbVie buying that company. Sorry, guys. People keep texting me. It's annoying. But so I saw that the price was down, so I bought a bunch of shares as much as I could at the time, and it's really doing well for me. So again, guys, always hold long term. Don't worry about market fluctuation. And if you see an opportunity, never hesitate to take advantage because the gains will be substantial. And again, like I said before, I go for dividends, so it going up doesn't necessarily help me. I want it to go down. But if you're a capital gains investor, this would still be a pretty good stock to look at. If you buy 20 or 30 shares, you have a $12 gain on those shares. So even 10 shares can give you $100. So if you're looking for a stock that you could get some decent capital appreciation in, AbbVie would be a very good idea. At least in my opinion. I mean, don't invest just because I say so, but I'm just saying from a technical standpoint, the 52-week high is still $12 away. So it still would be a pretty good price if you're getting into it now, but you had a better opportunity like a month ago. ExxonMobil probably down. Yep, down by like $1, so I'm down $16. Not too big, not too afraid to be down on ExxonMobil. Big oil company. I know it's kind of people are iffy on oil companies, but it's been paying a dividend. I think it's the third longest dividend payer in the stock market behind York Water, and then the other one was like a utility company. So it's been paying dividends for a long time. And it's increased dividends. It's a dividend aristocrat, so that's why it was on my watch list, and I bought it because I thought the price to dividend ratio was better than Chevron. Otherwise, I would have bought Chevron. So, like ExxonMobil, love the business. I know gas prices, oil prices can be fluctuating or whatever, but I think I can handle the volatility. And if I'm down on one stock in the portfolio out of 9, not really a big deal to me. Next, Target. This one, just like AT&T and AbbVie, I saw that the market, it was down on the market, and the 52-week, I bought it kind of in between though. So this is kind of more a lucky position than tactical analysis. So I bought it at 87, and the 52-week low was $60. So I bought it $20 up from its 52-week high. But the reason I bought it was because it was a dividend king. So again, just like I did with Altria, I don't really mind buying a dividend king for a premium. It's $20 above. People would say it's overvalued. I believe its PE's 18. So not really. I mean, it's below market value right now too. So I could actually buy it just like AT&T. According to market sentiment, this is below market value because the average market price is at 22. But for me personally, as an investor, I'd be going up almost $30. 7 more bucks. I'm going up $30 per share. I don't really want to do that. So market says it's below value, but for me personally, it's overvalued now. So got in at a good time, even though I was a little overpriced when I got in. I didn't care. It was a dividend king, just like I did with Altria, just like I did with Coca-Cola. When it comes to dividend kings, I really don't mind what price I buy it at because I'm buying it for the dividend appreciation. Don't really mind the stock price, and I will buy it when it goes down. But as you can see, with most of my positions now, they're up. So if you're a long-term investor and you buy like a dividend king, there's a couple upsides to buying a company that's either an aristocrat or a king. One, you don't really, honestly, in my opinion, you don't have to worry about the stock price as much because you're protected. So these companies are big. They've lasted through market destruction, and they paid their dividend and increased it through it. So that makes me feel a lot better. So not only do you get that dividend appreciation, you get the stock appreciation on top of that. And when the market goes down, these types of investments don't get hit as hard. So they're more insulated to market volatility. So that's why I love dividend stocks, because you get the dividend increases, you get the history of dividend increases, so it makes you a lot more confident in your investment. Plus, you get the capital gains, or the stock increases, and you get extra defense against market volatility. So AT&T was kind of a lucky play, but I bought it because it was a king. So that one I am up $230 on. So that is two stocks that I'm up 3 digits on now. And then, of course, we have Walgreens, which I only have one share because it's not a dividend king yet, but it's close, so it's an aristocrat. Bought it just because bought it at a decent price, and I've seen pretty decent gains on it. $4 isn't bad for a single stock. So that is the dividend portfolio right now, up triple digits on 3 positions. Really happy with that at 15.9, so almost to 16K. I was talking to a friend on Instagram, Alpha Investments, and he talked to me about Office Depot, which is a cheaper stock, which again I usually stick away from, and AMC, which is a movie theater company. But the reason I'm looking at these is because Office Depot pays a 2-cent dividend, not crazy, but for $2.50 a share, it's not too bad. You could buy, say, 100 shares for $200 or $250, and you could get enough to buy a share, right? So I think it was like $500 for both of those companies. So an AMC pays a 20-cent dividend, and you would need $500 to make both of these. If you had $1,000 and split 500 between both of them, you could buy another share forever, as long as they pay their dividend. But the issue that I have with these two stocks is that they don't have the dividend history that an AbbVie, an Exxon, an AT&T, or a Coca-Cola have. That's why I lean towards those companies. So I'm iffy on them. I might start a small position in there. And then the other one that I looked at was Pfizer, because if you look at Pfizer's chart, from what I've read online, I believe they were down. Yep, right here. So they were $43, now they're $36. So it's not a huge drop, but they are $3 to $4 within their 52-week low, so I would consider buying it there. But I believe that was the only one that I've added since I showed you guys the list last time. So that's it for the watch list. So stock update, doing pretty good, triple digits on a couple positions, and not only that, we added a couple new stocks, just smaller positions, little speculative positions there for value plays. I might add 4 to that too. So update on the watch list, update on the portfolio, doing pretty good, cannot complain with gains. We're in the green today. We've been in the green for a while, so it's been a while since we lost any money because the market's up. So awesome, awesome, awesome. I'm super excited. Thank you guys so much to all the new subscribers that have been checking out the videos, commenting, liking the videos, hitting me up on Instagram, stuff like that. Really appreciate the engagement and how excited you guys are about this portfolio. I love investing, so I'm so happy that people are tuning in, checking out the videos, talking to me, giving me feedback on stocks, what they would have done, giving me, respective criticism, stuff like that. I love it. So thank you guys so much for watching. I really do appreciate it. People who tune in every day, it means the world to me. Remember, if you enjoy stock market content and some stock market news, if I can get it in there, I will. Remember to hit the subscribe button, and when you hit subscribe, make sure that you hit the notification bell so you don't miss any Robinhood portfolio updates. I'm doing my best to do a video Monday through Friday, every Monday through Friday, unless it's a holiday. And that way I stay very consistent with videos, because I want my YouTube channel to grow. I want more people to be investing, because I think it's the best way to build your wealth. And I love making friends through this, and I love going to other channels and talking to people about their portfolio, the investments that they have different from mine, why they love certain companies. It's great. It really inspires me as an investor, and sometimes it gets a little lonely because investing isn't normal. So most people don't invest. So finding people that are like-minded just like you, and people who have passion for what they do, builds your passion as well. So I love this community. I'm very, very thankful. Thank you to everybody who subscribed and checked out the videos and given me feedback on stock picks and stuff like that. Feel free to comment below on your opinions on my portfolio and just stock picks in general. And, if you want me to check out your portfolio, I totally will. I love this community, like I said. So thank you guys so much for watching. It's been that Dividend Guy. Remember to hit the subscribe button, and I'll see you guys tomorrow. Super happy for the gains. Thank you guys. I'm so blessed to have this channel. I'll see you guys tomorrow.